If you hold gold, you're dumb as fuck. That's pretty harsh, isn't it? But that's exactly how Mark Cuban feels. Those aren't my words. Let me share the screen with you here and you'll see exactly what I'm talking about. All right. So, Mark Cuban went on this random podcast. It's called the Random Podcast by Bill Maher. And he went on to say that, look, if you have gold, you're dumb as fuck. That's what he told Bill Maher. And why did he say this? Well, they were having arguments back and forth over whether gold or Bitcoin is a better store of value. And Bill Maher actually said that he's rooting against, right here, you guys will see this, that Bill Maher openly admitted that he's rooting against Bitcoin. What a jackass, first of all, for rooting against an asset class where many people have invested in. If it were to bottom out, if it were to go to zero and be what he wants it to be, many people would lose quite a bit of their investment. So for him to root against something just for the sake of rooting against something, I mean, that's asinine to me. All right. So I'm glad that Mark Cuban, as he's known to do, came out pretty strong. And he said, look, I want Bitcoin to go down a lot further so I can buy some more. Key point here, right? He wants to go down so he can buy more. Anybody who understands Bitcoin, who understands blockchain and where the future is headed, wants the price to go down. Mainstream media and everyone outside of crypto thinks that if the price goes down, we're panicking. No, those of us who are actually full in this space and are fully aware of what the future is going to hold would love for the price to go down even further to grab even more. So that's what he goes on to say, that look, so I can buy some more. He went on to offer some friendly chastisement to Maher, saying, if you have gold, you're dumb as fuck, before encouraging him to just get Bitcoin. So I think that's very important that he says this. He goes on to say that, look, here are the pros and cons, and then he is stating that gold is not a hedge against anything. And he's like, he asked Bill Maher, he's like, you don't own the physical gold, do you? So while you may have gold, even a lot of times it's just that share certificate that people have, right? Or a certificate saying that you have X amount of gold and it's being reserved for you. Some people even own physical gold in terms of bars of gold, and it's locked away in someone's custody, meaning you don't have access to it. Very few, if anyone, is holding bricks of gold in their own vaults at home or somewhere. They're giving it to somebody else to custody it for them. In that case, you don't own it. Anything can happen to that entity. People can run off with the gold, do whatever they want, and you have no control over that. So Bitcoin allows you to self-custody through the use of a cold wallet, and it's a beautiful thing. But I like what he also says here, in terms, he being Mark Cuban. He actually, well, first of all, he goes on to say that I don't own any gold. So that is a great point, that he's saying that it's not even worthwhile to have. But he did say that, look, while he chooses to self-custody, he disagreed with the idea that people who do not hold their own coins or gold are necessarily asking for trouble. I'm glad. Look, as much as I hate on gold, I only do it in respect to Bitcoin over gold. Do I think it's a bad asset to own entirely? No. I mean, look, if you want to own some gold, great. Even I own some gold. That's fine. But when people just start saying, forget Bitcoin and it's only gold, that's where I have a problem. So I like what he says about custody. We preach, we being everyone in the crypto space, that if you don't own your keys, you don't own your crypto. But if you're not self-custodying, it's an issue. But Mark actually goes on to say, look, it depends where things are being held. If the entity that's holding your assets or your gold, where gold or crypto, if they aren't lending it out to other people, you're relatively safe depending on the safeguards involved. Now, to be absolutely safe, of course, if you hold it yourself, you're good. But if that entity is regulated and they're not lending it out and doing all kinds of risky things, then it's actually not that bad. I agree with him to some point here. Not everyone is meant to or is comfortable owning or holding on to their own Bitcoin or crypto assets. That's fine. As user adoption grows, it's going to be even more apparent that people aren't comfortable doing that, because the way the system is set up now, everyone's used to your bank holding it or some entity holding onto your financial assets. So for anyone who's used to that to automatically jump to, I want to control it myself, that's a pretty big gap. Most people aren't going to jump that gap right out the gate. They're going to want to do it slowly. And so in the meantime, someone's going to custody their assets until they get comfortable to do so. Unfortunately, most people learn to self-custody after a painful episode, whether it's FTX, BlockFi, Celsius, the Gemini lending arm. It's one of those things that when you get that pain, then you're like, now I see why people say self-custody and that happens. So hopefully we can get entities that don't do risky behavior, are stable, and then we can have even more user adoption because that's what people are used to. All right. So that is one. Okay. Bitcoin. And here's the thing, actually. Mark Cuban, believe it or not, is actually a Dogecoin fanatic, and more so an ETH guy than he was a Bitcoin, at least when he first started into this space. So for him to start saying, look, gold is nothing, just get Bitcoin, he sees the value 100%. And so it's always nice to see these guys who have made their bread and butter in Web2 or traditional finance and are now, they're now pushing this new wave, this new technology, and they're doing it so that the rest of us can actually benefit. Like Mark Cuban, what he's saying, that's freely available for us to act on and do. Whereas most of the time in traditional finance, real estate and stock market, or early stage investing when it comes to pre-IPO companies, we never had that access. So Bitcoin, ETH, the entire crypto space, we have full access. And if we're not taking advantage, we're letting the older players come into this game and do exactly what they did in traditional finance. So I do want to point that out. Second big thing here is about Fidelity. Fidelity is one of the largest entities in the world. And what did they do? Is that they filed a trademark application for a long list of things that they want to do in the metaverse. I know many people, especially older, poo-poo the metaverse. It's nothing. It's a bunch of nerds who want to play in a digital environment. And what happened to real life, right? I'm a real life person. And so, but you got to understand that this is the way technology moves. And so the same way people talked about the internet and said, no, I prefer face-to-face. I prefer real phone calls instead of an email. I prefer going to my neighbors or visiting somebody instead of doing it online. Those same things are being said now about NFTs, blockchain in general. So I want to keep that in mind. Now, these guys are obviously bright individuals, full of bright individuals, and have made a massive amount of wealth and have a lot of assets under management that they don't ever need to make a transition to Web3 ever, and they'll be just fine. But why are they doing this then? You got to ask yourself that question. An entity this large that does not move quickly for anything because they're so locked into their legacy models, why would they ever start transitioning over to NFTs, Metaverse, and filing trademarks for that? As the crypto Twitter likes to say, it's probably nothing, sarcastically. This is a big something when entities like this roll in. All right. So this is a lawyer on Twitter, a patent lawyer, and he highlighted that Fidelity has plans for the metaverse. The company has filed 3 trademark applications covering NFTs and NFT marketplaces, metaverse investment services, virtual real estate investing, cryptocurrency trading, and a lot more. That's quite a bit that they're looking to do, at least in a trademark perspective. Okay, so one of the key areas that they said is that they would offer a wide range of investment services within virtual worlds, including mutual funds, retirement funds, investment management, and financial planning. Now, all of these terms are very well known in traditional finance. So it's interesting that these terms people will gravitate towards, but where is it that they actually want to offer these services? It's in the metaverse. So that's very interesting. Things that you're comfortable with being put in an environment that you are not comfortable with. This is how adoption is going to move. Now, it goes on to say that it also appears that metaverse-based payment services could be in the works, including electronic bill payments, fund transfers, and the financial admin of credit card accounts in the metaverse and other virtual worlds. As soon as payment gets in anywhere, it always drives a lot of that mass adoption. And it says in terms of crypto, the filings indicate that the firm could launch trading and management services in the metaverse, along with providing virtual currency wallet services. look, whoever wins this wallet game, and there are probably many winners, at least many big players, providing a wallet service that mass users can adopt easily, understand it, and not be worried about the back end, that's a big deal. And so I'm not surprised Fidelity wants to be in that space. They also go on to say that, look, Fidelity outlines that it could offer educational services in the metaverse in the form of conducting classes, workshops, seminars, and conference in the field of investments and in the field of marketing financial services. So this is one thing, right? We think a lot of times that I'm the user. Why would I want to be in the metaverse? Or why would I want NFTs? We don't see is how do those technologies benefit the professionals, quote unquote professionals, in the field itself. So when they're saying that financial service, investments or financial advisors or any of those credentialed individuals or professionals in the marketplace, in terms of the financial marketplace, how can they benefit from having a metaverse? Well, you can do conferences in the metaverse. You can have seminars in the metaverse. You don't have to go anywhere in order for that to happen and still create a unique and fun environment where people want to learn and still meet each other. So the use cases are not just what can I do through it as a user, it's also the professionals in it and the entire industry. So keep that in mind. So the article goes on to say that providing business information to financial service providers by means of an internet website in the field of business marketing in the metaverse and other virtual worlds, referral services in the field of investment advice, and financial planning in the metaverse and other virtual worlds. That's what one of the filings reads. And that here's what's really interesting is that NFTs are also in Fidelity's plans, with the investment manager stating that it could launch an online marketplace for buyers and sellers of digital media, namely NFTs. And they go on to say that, however, the details aren't very clear on what that is. But that's fascinating, right? We are all stuck. And when I say we, it's the mass majority here, are stuck thinking NFTs is art. Let's say as soon as you hear art, you think NFTs. As soon as you think NFTs, you think of just a profile picture, JPEG, right click, save as. But the use cases for NFTs are endless. It's a smart contract, right? That gives you transparency into the history of that particular asset. You can see who's owned it. You can see how much has been traded for or bought and sold for. And it just gives you a history of everything about it. And it's a unique ownership of that asset where there aren't duplicates of it. And so you can wrap a whole bunch of financial instruments as NFTs, even if you're looking at strategies, financial strategies. So if you're looking at how to invest in mutual funds or ETFs or have a equities plan, that can all be wrapped into an NFT, that strategy, and sold off. So very interesting what is happening in the space, and the fact that they're filing for it, that's just the tip of the iceberg, what I mentioned. So the latest filings from Fidelity show that the firm has not been spooked by the intense bear market in 2022 and recent FTX implosion. It's instead looking to increase its exposure and offerings in Web3. Think about that. While the entire world, especially mainstream media, is dumping on crypto and Web3 as a whole, why is Fidelity looking to increase their exposure? And there's got to be something. These people do not do things unless they have a good idea or have thought about the long-term ramifications of what they're doing. Like I said, there's no need for them to be in this space or any space quickly, but they're making moves. You got to wonder why. Okay, so it goes on to say that a Fidelity spokesperson told Cointelegraph at the time that the company has always prioritized operational excellence and customer protection, and noted that recent events in the crypto industry have only underscored the importance of standards and safeguards. So again, no one who's serious about crypto or Web3 long-term is saying that regulation is not required. Nobody. It's just, what is the breadth and width of that regulation? We want to make sure that it's not harsh where it doesn't make sense, but that there also needs to be some clear guidelines. And once those are in place, this industry is going to absolutely explode. And Fidelity is on the same page. And look here, it is also worth noting that back in October, Fidelity was reportedly looking to beef up its crypto unit by hiring 100 new staff members. which is a stark contrast to a number of crypto firms that have laid off a significant amount of employees this year. So even if you look at Shopify, you look at Amazon's, you look at any of these big tech plays, Meta, they're laying people off, right? Even Google is probably close to doing so if they already haven't. But you've got Fidelity here, who's beefing up a unit that's specific for crypto and Web3. Again, gotta watch what they're doing and not what people are saying. This is really big news. So I want to hear what you guys have to say. Do you think that you are dumb as fuck if you own gold and you don't own any Bitcoin, or you own more gold than Bitcoin? Like, subscribe, and let me know if you want to see more videos just like this.